Yo, how's everybody doing? This is Mr. Anderson, True Crypto 28. All right, so today's video gonna be a longer one, so prepare yourselves ahead of time if you're interested in alpha. If you're not interested in alpha, please turn off now. Here's the thing. I've noticed a couple things, right? By the way, this video is meant to be directly for the Discord group, which is free. I'm going to put it on Telegram because a lot of the Discord guys hang out there as well. Maybe I'll release it to the public. I haven't decided yet, but the casual approach is because I'm talking to the guys that I normally deal with. But we'll see what happens if the public gets it as well. The idea is this. I want to be very straightforward. I created this indicator, which is true vibration, and it has many, many different levels of edge and alpha to it, basically, that can be utilized by the user. But I know that a lot of people either, one, they might find it complicated, or two, just haven't taken the time to do it, or they just struggle to do so. But there's another group in there, which is a group that basically began to focus primarily on the signals indicator, even though I warned against it. So we have a signals indicator, which basically came from this tool. And it does a great job of providing a couple of signals based off this particular tool. But a tool is going to be as good as the person that's using it, right? So me using a basketball versus Steph Curry, two different things, right? Me using a paintbrush versus my wife, two different things. She's an artist. So just like any tool, a craftsman, a guy who specializes in whatever it might be is going to do far better than a normal person. And really the goal is for you to find ways to find edge with the tool so that it can help you in your trading. It's the only thing I'm trying to do here. So the reason I brought up the signals indicator is because I noticed a lot of people, they either started to solely rely on it or even utilize it in the wrong way. I think the signals indicator is great for setting alerts to give you looks like throughout your day or throughout your week, and you get an alarm. You say, oh, wait a second, it's, this particular alert has popped up from the signal indicator. Let me look with my own technical analysis eyes and see if I can decide if this should be a go or not in terms of the trade. I like it for that. I also like it for the guy that says, look, Mr. A, I am a losing trader. I just get my butt whooped all the time. It's not pretty. Great for that person. If they utilize sound risk management and use signals from the signals indicator, they're going to be fine. They're certainly not going to be getting crushed left and right. So those are what I think that's good for. So I see it as a good combination. But I've always told everyone, find out how to utilize this tool. So I'm going to go back deep again and take a deep dive into how you use this tool, right? And we're going to only focus today on one very small part, which is the setting 4545. There's many settings, but we're going to talk about the one. But within that, I'm also going to speak about other elements that naturally create edge. Things like divergence, support and resistance, range highs, range lows, a couple different tools within this indicator. We're going to talk about things like being potentially offsides, right? Which you'll understand in a minute. We'll talk about a couple patterns with the tool itself. We're going to talk about, swing failure patterns. We're not going to teach it. I'm just going to mention them, right? So I'm going to mention all of these things. And of course, it's always market structure first, always, for all the guys that know me. But the whole point and the purpose is for you to utilize this and combine a few aspects of all these things that I'm going to mention in order to find the trade. So what does that mean? Well, before you get started, just so you understand, do you need everything I mentioned to line up? Absolutely not. But a few of them, right? So what does that mean? Well, you've drawn out a support. You get a swing failure off of that support. And this particular tool, instead of me mentioning what the signal is, provides a reset, which I'm going to talk about in a minute. So you get a reset at support on close. Perhaps that's followed by a local low, which just means that the candle that followed took out the high on close of that particular candle. Well, guess what, guys? You have a trade, right? That's a trade. You have a directional bias, which was up. You held support. You possibly had a swing failure into support, even better. You had a reset on the oscillator that we like a lot, that we feel has significant edge. and you got a little bit of a confirmation by the next candle showing you some action. Now, you could have went into a lower time frame within the wicking candle and maybe even tried to nail a more accurate, or how we want to put that, kind of like a bullseye type of hit without the confirmation. You could do that too. But these are things that can provide edge in trading, right? So that's what we're going to talk about right now. All right, little water there again, and we'll go. So like I said, I'm going to run off a bunch of these things, and all I'm going to mention is what we're going to do. I will say that you guys should probably take notes over these next 10, 15 minutes. That would be excellent, because it would help you to have an understanding of like, hey, he's talking about this or he's talking about that, or understanding specifically what they are if you need to look them up, or being able to just go back and figure out, how do I piece these things together? Now, there's a few guys within Discord that are amazing note takers, and they've done amazing things throughout the years that allow people to make their life easier. If one of them want to take on the challenge the next few days to make notes on this, that would be awesome. But obviously they have their own lives. But if someone decides to do that, make sure you thank them. If they throw it up, they can send it to me. I'll post it to everybody, etc. They can post it on Discord for everyone, etc. Same thing. I'll post it again on Telegram. That'll probably happen, but we can't promise anything. I didn't take the day to map those out. So you're just going to have to listen. You can pause at any point and write down what I said if you want to get a detailed account of it. And we'll run through some of these things, okay? So first, here's the variables. This skinny line here that I'm tracing, it's a skinny pink line. This is the thicker line. This is the skinny pink line. The skinny line is called FSR. FSR. FSR is the main, by the way, in case anyone's missing that and they really care to know, that's Foxtrot, Sierra, Romeo. FSR, Foxtrot, Sierra, Romeo. It is the main tool within true vibration. And like any oscillator, it goes from high to a low, high to a low. So we're going to consider what's called a reset, right? And a reset for us is going to be a low to a high, to a low, to a high, to a low, to a high, to a low. Now you might wonder, well, why were you jumping around like that? Well, I'll show you. Because we're going to consider, for the purpose of this video, a low is going to be anything at 10 or below. So it has to crack 10. That's a solid white line, so you have a good reference in the future. 90 is going to be our high, right? Now all that means is that once it touches that level, it can qualify as a potential reset. Why is it called a potential? Well, because we're not Nostradamus, right? There's never any actual any actual guarantees in trading. So it may have reset, or it may swing around a little bit and come for a higher level of a reset. All possible. It might set a divergence before hitting a low. But we're going to focus on the ones that go above 90 and below 10. Now, may I mention some others that don't get to 90 in this video? Probably will mention it a few times. But for the purpose of the video, the primary concentration is going to be on the ones that go above 90 and below 10. Now that we got that out the way, what is this big line? This solid line here is one that is called full vibration. And that is just a moving average that we utilize based on FSR, okay? And for the purpose of this video, it's going to be important for you to understand that I am making a comparison between FSR and price, okay? Now you might see this green line, so just so that you're aware, the green line is the 9 simple moving average. The only reason I have it is that, typically speaking, if you are above the green line and the green is above this other level, which is the 45 that I'll explain in a minute, you're normally trending at that moment. You could think to yourself, well, at the moment we're trending. If I lose that 9, there might be some problems in this trend, right? If you're above it, it's safe to say, hey, we're normally trending. The reason I bring that up is that, as simple as that is, you can really crush it when price is holding above that level. People may say, oh, well, it's so simple. What do you mean? That's silly. Well, it is simple, right? I agree. So if you knew that it was that simple and you've been someone that has always understood that, then I'm assuming that you then bought here and you had this entire move higher. Or you bought here and you enjoyed the entire move higher. Or you bought here and enjoyed the entire move higher. Basically, that would mean that you were from 11,000 to 57,000 completely long, which you could have been utilizing just that one moving average, right? So I'm just making a point here is that typically strong uptrends will hold above that level. They'll come back down for a little reset, right, that we talk about. But that's the only reason why it's on my screen. It doesn't really have a purpose in this particular video, but since it's on the screen, I just wanted to show you. So I don't want you to be confused. Remember, FSR is going to correspond to price action, meaning we're just going to compare the two. And the thicker line, which is full vibration, is going to correspond with the 45 exponential moving average of price action. Okay? Now, why 45? Why not 50? Why not 55? Who cares? You could do 50, 55. It's not much of a difference. All I'm trying to do is be consistent in my approach. So if you want to use a 50 or 55, feel free, knock yourself out. If you're trying to duplicate what I'm doing, utilize a 45. It's just something that I started using 2 decades ago, and I've stuck with it because of that situation. I can assure you there's not much difference between the 45 and the 50 or the 55, etc. But for the purpose of this video and the comparison, why do I tell you that? Well, because you're going to look at the colors. And the colors here will be green if price action is above the 45 EMA and FSR is above full vibration. It will be blue if price, which is always more important, right? Market structure first always, price is more important than momentum, okay? So price is always more important than momentum. If the price is above the 45 EMA, however, the momentum has now dropped below, meaning FSR has dropped below full vibration, which is his own oscillator. And I should have pointed one thing out, and I apologize. This should go in the notes as well. In a moment, there will be a line that will appear. Let me see what color it will be so I don't mess things up and tell you exactly what it will be. Excuse me. Let me get rid of that. Why did I bring that up? Okay. Yellow. Okay, so there will be a yellow line here, right? That yellow line will represent the 50 level. I'm actually going to throw up a couple other lines since I already messed this up, which we're going to change this setting to 60 and this setting to 40. Okay, and this setting back to 60 that didn't want to set. Okay, forget all that you see for a minute. We'll get to that in a minute. So there will be a yellow line in the middle that will represent the 50 level. Now, if full vibration is above 50, generally it means there is bullish, especially rising, there is bullish momentum. Okay, remember, these are all just tidbits that we're going to utilize in about 10 to 15 minutes. If full vibration is below the 50 level and falling, then there is typically a significant drop in momentum or accelerating momentum to the downside. However, and here's where a lot of people get confused, it's always market structure first. Therefore, the reason why I have these 40 lines and these really 55 matters, 45 matters, etc. But right now I put one at 40 and 60. And the reason for that is that if structure is bullish and we should get a 40 touch or even a drop below 40, then we have the possibility for some springing type action, right? That becomes a real possibility in that scenario. Whereas if we're in a bear trend, remember, these are just notes for now. If we're in a bear trend like this and we drop below that 40, we can have some massive acceleration to the downside. So I just said two things that seem opposite, but it's all based on market structure. So if your directional bias or your market structure is sound, meaning that you have a decent understanding of how price action is and you can recognize downtrends or anything along those lines, now these colors are going to help in a minute, well, then that's going to help you to understand that this can be, we have a video called How Do You Find Runners, right? Well, the runners video worked like this, is that in this particular powerful tool goes above 60 right there in an uptrend, it might be boom time, right? And guess what? It was, right? You see this? That's the purpose of this. Now, this is one thing that you check off the list right there. You go, oh my God, this thing really does have some alpha, because when this happens in a bullish structure, you see we're suddenly seeing what? Higher lows, and then you get above 60 here. Is it guaranteed to fly? No. But does it have extra edge to fly? Damn right it does. And look what goes on here. That is an unbelievable move, right? And by the way, reclaim it there. Oh, happy to ride that next wave up, and it's a dramatic one. Oh, we reclaim it again right there. Happy to ride that up again, and then we start seeing this topping formation, but we'll talk about that another time. So that's something to consider. Again, I'm just giving you a bunch of tidbits. I'm throwing a lot of information at you at once so that it all makes sense in a minute. So above 50, relatively bullish momentum, not price action. The price action is what determines everything to begin with, right? So if I went above 50, again, as I mentioned, because that's going to happen in these downtrends, I might as well just show you real quick. Really quickly, forgive me for doing this. I didn't mean to jump around in this particular order, but I want it to make sense to you. So this line is the one we're watching here, right? And you see what occurs here is you have this big move above not only 50, but above 60. But look at the overall market. We're in a significant downtrend. We have not recovered anything at this point. This is a trap, right? That's how we identify traps. You can identify some of the greatest traps in history with this, and we're going to talk about that in a minute, okay? So that's that. I'll go ahead and turn this off for a second again and explain the colors, and then we'll turn it right back on. And then I'll try to fly through some of this video. I'm sure I'll have a follow-up video to get more into nitty-gritty, but I just want to show you. I want you to leave this video and say, this guy just showed me alpha, not some BS, right? Not some stories, not one example. These guys, they show one example. They're like, hey, here's the setup. Oh, look, it flew. That's the move you should do. And then you look for it and it fails 50% of the time. No. I'm going to show you 100 examples, right? And you're going to realize that is alpha, okay? And it's going to start the process and make sense to yourself. Like, okay, maybe I don't know how to do this yet, but I see that there is a way. And that's going to put you on the path to going and being able to do it yourself, okay? So for the sake of this video, colors. I already mentioned it, but I'll repeat it. Green means, very simply, that FSR, the skinny one, is above full vibration, and price action is above the 45 EMA. The blue means that the price action is still above the 45 EMA. However, the momentum has fallen below. By the way, that's a good thing. We love momentum to take a rest, come back, relax, and eventually go again. So that's how we would measure that. What is the red? Well, the red means the opposite, right? So the red means, we'll go back to some heavy red here in a minute, something like this. You're going to say, well, the red means that price action has lost that 45. Now, is the 45 some magic ingredient? No. Is it the most important exponential moving average in the world? No. This is just a way for us to look at something and have some consistency in our approach. You can use the 34. You can use the 21. You can use the 200, right? By the way, you can be looking at the 45 and get chopped up for a little bit because, hey, maybe it's making a mean reversion move to the 200 or somewhere nearby, and it's going to then correct on its way. That's life. Looking at it this way provides us with consistency in our approach. That's it. That's it. Can you get more advanced? Can you get better? Can you improve upon what we're talking about today? 100% you absolutely can. Can you utilize any other aspect of edge that you already have? Yes, and you should. Okay? So that's what I would tell you. Now, with that said, we go red. What does red mean? Red means I've lost this 45 on price action, right? And I'm also trending below it on momentum. Okay? So here we are, full vibration. I'm below it. We're red. Notice the moment it goes right there, you might say, well, why did it turn red there? Well, that's when we lost the price action, which is most important, right? So it's momentum losing it first, because often momentum before price. And then in this case, price caved as well. Now, sometimes it might cave there, it might stop there, it might stop close by, it might then rebound. That's going to happen. You'll have little elements of chop. This, again, is not a money tree, right? This is a consistent approach to find edge to get us into trends, okay? It's also not only trends only. You can do very well in ranges with this as well, but it's your job to identify the fact that you're in a range and, hey, I'm touching range highs and I'm getting this signal, so therefore I'll take it, etc., which I'll show you those signals in a moment. All right, so there you go. Now, what is orange? Well, orange means that momentum has peaked above that level, which isn't hard to do for an oscillator, right? So I could care less if it's going orange or even to green sometimes, right? Meaning on different time frames. I'll explain that in a minute. I don't want to confuse you. I don't care if it goes orange. Let's put it that way. Meaning it's not changing my thought process, because this hasn't even gained this 45. Not to mention the fact that if it did gain the 45, this is a subnote that has nothing to do with this, but The reality is the 200 is probably somewhere up there. So we basically not only have to gain that 45 to rotate things around, of course, price action and market structure is first and foremost. So we really want to see market structure change, see some type of change of character, break of structure, lower, put in some higher lows, and then eventually a higher high. That's what you really want to see. But the point that I'm making, since we're talking about moving averages, is that this is just a 45. It's going to need to go grab the 200, claim the 200, hold the 200, go again before you're even thinking about upside momentum. That's why we, everyone in here, from 66,000 to 15,000, never said a word about longs, right? We said no, 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 no. There wasn't a thought of a long other than on the 1 hour time frame and below at a couple different junctures in time. All right, little water again. Now, having said that, okay, now at 15,000, we said what? We're about to roll, and it's not going to stop at 25. In fact, we said 31.7. I think we got to 31.8. But it is what it is. You know, we just got to tell you the facts of how it worked out, and that's how it worked out. Now I'm going to start rushing through this, and again, I'll do a follow-up video. But now you see what orange is. So why did I bring all that up? Well, this is a daily time frame. Now, you can normally split the screen, something like this, and you could have your daily here on that screen and your 4 hour on this screen, because this video is actually about a daily to a 4 hour, right? We're going to look at the 4 hour versus the daily. And you basically can split the screen because you're not going to look back in time. I'm not going to split the screen because it's going to make it too small for you. But you can, and you'll know, are we red? Are we blue? Are we green on the daily, etc.? We're going to talk about that. Now, the first thing I'm going to do here is I'm going to show you something. Now, you see all this on the daily, and I'm now going to bring this back up, and you wonder, like, whoa, why does this guy have all of this colored and painted out? The reason I do is because I want you to see really quick, if you could take a quick look and say, green matches green, blue matches blue, green matches green, blue matches blue, green, red matches red, green, green, blue, blue, green, green. You guys can agree, right? Now, there are a couple spots where it changed for like one line, which I didn't change those colors because I'll be here all day if I do that. It doesn't matter anyway, and I promise you that in a minute, but it's not to give it a better look or anything along those lines. It's not something I ever do. It's just more for time. Is there going to be a couple times where it gets chopped up? 100%. And right now we're on a daily scale. So the thing with daily scale is that you got to understand, if you trade on a daily scale, you're going to have massive swings that you miss, and that's okay if that's what you like. Maybe you trade daily to weekly. Go for it. Do what you got to do. But for the sake of this, I typically trade on the 4 hour. Do I trade lower? Yeah. Do I trade higher? Yeah. But majority of the time, 4 hour. And I like to go on a 4 hour to a 12 hour or a 4 hour to a daily. The reality is, in my opinion, the daily is everything, right? And I say everything, of course, I don't mean everything. What I mean is, ultimately, that's what matters, is where the daily's closing. Of course, the weekly has significant influence. I would say not as much. Now, weekly swings matter more, not even as much, but more. But in reality, day-to-day type trading, I focus more on daily closes, and I only mean daily closes. But still, we like to trade intraday. So I look at that 4 hour, and I like to base things off of the daily when I can. Now, does that mean that if the daily's in red, I won't take a long? Of course I will. But for the sake of this video, we're gonna not do that, okay? And I'm gonna explain it, because right now, the reason I put these colors on the screen is I'm actually gonna get rid of this. I'm gonna go to a 4 hour, and these colors are gonna be left there, and I'm gonna eventually come back, and I'm gonna go ahead and run off a couple more pieces of information for you, right? When looking at this particular setting of 45-45, this strategy, the first thing I want you to know is that if you get green, right? So now this is the 4 hour that's displaying right here. And this is the daily that I placed here. Remember in the beginning, we showed you, and just so there was nothing that was misunderstood, I showed you that it's going to match the colors of the daily. And what I'm going to show you is that, hey, what do you get when you get daily green, 4 hour green? Well, daily green, 4 hour green is go time, right? That means we're looking for longs. We'll probably go ahead and trade breakouts. Like, normally I'm not a breakout guy, right? But that means, so right down here, if I'm green and we make a higher high, yeah, I will take that trade often, even though I'm not a guy that likes to trade breakouts. But I would go for that and say, okay, higher high and close, I'm willing to take that. That's something that works out well. So when you're green, you're looking for longs, unless price action struggles. on like a second green or a third green. What do I mean by that? Well, let's say you go green, right? And then suddenly green again, but price action cannot make a higher high. And then you see it go blue and then green again, it can't make a higher high. Well, that could be a sign, right, that there's a struggle going on. But if it's holding a range, again, if you need to pause this to understand what I'm saying, feel free. But let's say you get up here and you go green, green, it's holding range. What we're looking for, and here's the key to everything, we're going to be looking for resets, what we talked about earlier, FSR below 10. And those are normally going to be really good entry points. And in doing so, we'll also look for something like perhaps a local low. Local low, again, I won't repeat it, but this is the last time, is basically a candle that will close above the high of the previous candle. So you might go local low there. Some might not consider it because that's an inside candle, but that's fine. Whether it's a local low there or one there, etc., or up there, it doesn't matter where you put it. You could see they all would have worked out just fine. But my point is some type of confirmation if you want. But that's green, green. Now, what I also want to mention is that, like I stated, it's always market structure first, always, right? So you're always paying attention to the market structure. So if we're in a downtrend, it's going to be different, which I explained in the beginning. You're always going to look at your support resistance. I'm not going to start drawing support and resistance lines, but of course you should know what's a support, what's a resistance, what's topside support, things of that nature. Those are key. You should learn how structure works, right? You got to understand essentially lower highs, higher high, higher low, etc. These are basic concepts that you want to study and make sure you understand. So again, we're not going to even get into that because I'm going to show you the edge even without that. But of course, once you add your support and resistance in there, then that's going to become key. And of course, in an uptrend, what's going to matter is your support levels because you're looking to buy, right? In a downtrend, what's going to matter is your resistance levels because that's what you're going to sell. You also want to understand supply zones and demand zones, right? Meaning similar to range high, low, etc., depending on where it's at, but ultimately finding an area that should typically have support in theory, and then you're going to look for a reaction at that level. Well, how do we look for those type of things? Well, you can come in and say like a swing failure pattern, right? What's a swing failure pattern? Well, you took a wick here, your wick there, by the way, that was a swing failure as well. So I had a wick, a few candles later, a wick that came lower, price jumped back up, and then I came back here, once again, wick lower, closed back above, and then tried to move up again. That's a swing failure. What does it mean? Well, it means that I took out the swing level, meaning that if we would have closed below that, we would have considered a swing low, right? So in that situation, it did not close below it, so we call that swing failure pattern. Very simple. Bullish one would be the opposite of that. We don't have one here in this example, do I? Let me see. Nope. So basically, opposite. It's pretty simple, right? So if I was here and price went above that level but closed below, means it attempted to swing higher, but it did not, right? So the wick went higher. It would have qualified as a swing continuation, but instead we reject it and we consider that a swing failure pattern. But it's helpful because that is going to be an assistance to you in what we're talking about. We're talking about exhaustion candles, rejection candles, swing failure patterns, even a failure pattern like a failure reclaim. What does that mean? That means that on my time frame, it did in fact close below, but then on the next one, maybe I had a bullish engulfing that closed back above that range, right? And that's just an element of understanding time frames. I don't want to confuse you too much, but these are things that you want to jot down to understand that it's going to be part of the collaboration here. Even though I'm not going to talk a lot about it, these are the things that we want to combine a little bit. You would like to combine a rejection candle along with a support, along with a reset on FSR, and suddenly you have a lot of edge there. Okay, very simple. Rejection candles. What do they look like, right? And something that gives you obviously a nice move up. You can look this stuff up for yourself, right? It's readily available on the internet. Bearish rejection, etc. So just found a couple examples really quickly for you guys. Now, I'm going to come back to this because I started already to show you green, blue, and I'm going to show you some more of that in a minute. But we said we're going to show you alpha. I said 10 minutes. It's been longer. So let me show you what we're talking about with there so that there is no mistake and you won't call me a liar, because there's no doubt that you're going to say that right now, right? Because we say very clearly, like, hey, what's the point of this? So right now, we're not even going to look at the colors because I've already explained to you that the color here is not so much the key on this particular time frame if we're utilizing a base of the higher time frame, right? So I actually may show you some that look green, but maybe it's green here and it's red on the daily. We're not going to get into that, otherwise we'd be here forever. But just take my word on it where I should, because really my focus here is going to be on resets. So we're going to look at FSR resets right now, and that's my main focus. In fact, I do want to go in here. I don't need to. All right, focus is going to be the reset. So essentially what happened here, everyone that knows that was around what happened, we had this swing failure pattern way back here. We said we don't want to reject at this 65, 66 level, right? We did, exactly. And we were full on bearish from that point on. We actually were full on bearish from right here. But we knew that likelihood of seeing this like Quasimodo type pattern here was going to fall into place if we saw a rejection there, and we did, and things got pretty ugly, right? So we're going to talk about a few things. Now, again, having a good understanding of divergence, especially hitting divergence, is going to be key as well. But knowing how to utilize them, and of course you usually want to utilize them when they are in reset positions. Now, as you get more advanced, you'll see other ways to utilize them. But utilize them within the reset is key, okay? So right now, I'm going to swing through this very fast, right? And I'm only going to show you the resets of FSR. Reset, by the way. So this reset, after that rejection, again, that's one of those situations where you say, oh, okay, we reject right at the resistance level. We have a swing failure, doji type candle or a spinning top right there, followed by a confirmation candle if you wanted to wait even more, where you have this significant bearish engulfing right there. That is a trade, right? That is certainly a trade for you on that reset. Regardless, the next reset is right there, right there, right there. You see what we got? Happens to be the perfect pivot. This next reset is also a hidden bear divergence, and it happens to be the perfect sell spot, okay? You see where I'm going with this, guys? The next one also happens to be a hidden bear divergence with this tool, right? So this tool here, now, by the way, yes, it is. Okay, just making sure that it also looks like it might be a swing failure as well, but doesn't matter. That would just be an added benefit, and that's right there. And of course, we're certainly in a huge downtrend on the higher time frame, which we'd be matching up. But right now, we're just looking at these resets, right? Just to give you an understanding and feel good about it, to understand, yeah, in a downtrend, you're looking for bear pivots, right, off of resets. That means above 90. And look how well it works. And then we go for it again right there. Oh, look at this. I don't know, maybe this is 5 in a row of literally the most perfect spot on the chart that you could find. Nice, okay. Next one's right there. Notice we hit that 10 level, excuse me, that 90 level once again. That's right there, literally connecting to the perfect spot on the chart. It's not always going to be perfect, guys, just so they understand. This one, I don't even know if it just barely touches it or not, but it's close enough. Regardless, you could see what it is. Don't count that one if you don't, if that maybe that only hit 89, but eventually you'll understand that, yeah, if I get something like that and I have the bear candle at a rejection point, then it might be worth going for. And now this is a good one. I like to show you this because you get this a lot too, where you say, okay, well, this is a good spot. It sort of fades for a day or two, but nothing comes out of it until you then set a divergence here, right? So you end up coming back, a reset, and notice like, oh, okay, suddenly the momentum is not as strong back into that scenario of a reset. So where this one was probably a break even, because although it did fall, snapped back pretty well. By the way, maybe even lost money. I don't want to oversell this. I'm just making a point. So you end up in that situation where the next one, I always tell people, take the next one and take the next one after that. If you get caught, the next one's a better signal, right? Look at this. You thought this was a good signal. It didn't work out. The next one's a better. You had weaker momentum, higher price. It's struggling at resistance here, right? Wasn't able to take a level, etc. Now this one didn't quite make it, so we won't count it at all. But this one happens to be that little pivot right there. You kind of see where we're going here, right? You see a trend? I would hope so now that we're about 10 into it. Now this one happens to be a long-term hidden bear. See that? Which is higher momentum. Boom. Again, we're falling. And they're not all, you're not going to always have mega trends like this. But the point is when you do, what's going to happen is you're going to kill it. You understand? You're literally going to crush it in these trending situations. Now, finally, after this, as you can see, we go into some greens. But just to kind of line up so I don't have to bring that circle, you guys can take my word for it on some of these. This one was still decent. The next one here is chopping around. But you notice you're not getting crushed on these even when it doesn't work out. You're in a situation to where you say, okay, we're doing all right. Even, by the way, that one, it might have made it. But the point is, this one actually did work out fairly well, but this one didn't, and this one was just choppy. Then a big up thrust, right? That it leads into that divergence. Now, on the higher time frame, is this red? Is this blue? We're not looking right now. We'll look at all those in a minute. But the idea is I do want people to see this so that they're understanding that, yeah, you can get some misses in here as well, but the misses are normally a sideways type action, and regardless, you're setting the stop anyway, and that's just a normal take your loss in that situation. Regardless, you go into this, now we're a reset into a divergence. We like that even better, right? Which holds, right? Never breaks. And then this is called orderly momentum. What's an orderly momentum? Orderly momentum would be when I basically have a lower high in both the oscillator, FSR, and price. That's called orderly momentum. Or a hidden bearish in the downtrend. A hidden bearish with a lower high is also going to be orderly momentum. And that would be the opposite for the bull side. Okay, so there we go like that. So again, we end up into this hidden bull scenario. Perfect, literally the perfect spot. And you're crushing it now on a mega run yet again. Then that leads into this one, which doesn't take off, right? You know, you get a little drop here, but if you held, you probably had to exit out, etc. You see how that worked out. But then the next one, like I said, always take them. This ends up being that perfect one yet again. Thank you. We're very happy. This one happens to be orderly momentum. It is a reset again. It's literally the perfect spot yet again, guys, right? Here. So this is edge. This is what we talk about when we go edge. Now look, we go into this and you'll start to recognize this over time. Now this is a little different situation. We're green, 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 green. And this is where the market structure comes into play, where we're suddenly seeing lower high, higher high, lower high, higher high, lower high, higher high, right? So this is a nice trend on this time frame, right? But admittedly, I can understand, I want to be clear on this, you can certainly get bear goggles in these situations and think, oh no, we're still going to go down to zero, etc. And I wouldn't even blame you if that were to occur. Now, I'd have to see the higher time frame. I'm not going to turn it on right now. It might have been green, green at that point, which it probably was. I think it was in here. But it's okay. Let's just imagine that, hey, you entered some of these. Notice again, I do want to point out that even in the midst of this uptrend, what happens on the reset? You notice how it fades for a little while? And then it fades for a little while. I'm not considering them winning trades. I'm going to consider these break evens or even losing trades. But you see how it just fades instead of you dying, right? You don't see this, boom, right? You're not seeing the big up thrust happening in those situations. No, it's after the move, and then it's battling a little bit at worst before going off. So it gives you time to understand and recognize that even if you happen to be on the wrong side, you're usually not getting crushed, okay? Still, use your risk management above all else. But then what happens as we start to roll over, your discipline helps out because now suddenly you're back to orderly momentum. Right there again, perfect spot. Right here again, a hidden bear, perfect spot. Another reset right there. This one's not perfect, but it heads into what? A divergence. Now, I understand if you skip that one because I said until you're advanced at this, don't even get into the ones that don't reach 90. Is this something I'd be all over? Yeah, of course. Why? I got a massive rejection candle, right? That happens to be a failure candle, basically on a higher time frame. And then you're in the situation to where, yes, you saw a significant divergence. You lost this 45 again. So you went red again. All of these things come into play. But regardless, call that a loss. All right. Pack to wins now again. Perfect spot. Perfect spot. Literally the most perfect spot you can think of for a mega trend line down. And then we get back into after making all that money, you still get one more decent move to the downside, another reset, decent move to the downside, big up thrust that you're not paying attention to until you get up here. Remember, it's at this point. Once it crosses, that's when you say, okay, give me a local high, give me a rejection candle or something, give me a swing failure. And that happens right there. The most perfect spot you can have. It's not going to always work out that way, but you see how many times it has, right? Which is why I try to teach people to utilize this type of system. And then again, and then again. And then that leads you into this one, which is the mega drop again, right? So we're literally able to short, right, the vast majority of this move down to, 19,000 before it chopped up forever, etc. You get the point, right? Now get back into where we were. We know that we ended up going green, green at this point. Look at where it goes green, green, guys. That is literally, what is it, 16,000 at that point? We're in that we know the daily is slow, right? The daily is late, but in this case, that late daily still went green at 16.9 and essentially stayed green for the vast majority of the move. But going back to what we talked about earlier, green, green means go, right? So we're looking for reasons to long. We're certainly interested in any reset that happens in green, green. That's a good thing. But green, blue, so that you understand. Green, blue also means, that just means a H4 momentum, so it means we're green on the daily, and the momentum on, blue on the daily, and green on the H4, right, the 4 hour. In that situation, it means that our momentum is now lacking on the daily. But those are also great times for resets. Now, we're a little bit on alert because we do know that it can rotate, right? So that's something that can happen. But ultimately, you're in a situation here to where you say, all right, basically, I understand that when this is blue, it can switch to red. I just have a little bit more of an alert up, right? So you don't have as much edge there. But at the same time, I'm absolutely still looking for these resets. And notice the reset, right? I'm not going to zoom in too much because I'm going to try to end this video now. But you'll see this right here. Reset, up. Reset, a little bit up, right? A couple legs up here. Reset, flatten out. Now, we know we're red here, right? So we should have been on alert anyway because we're red, blue, right? As you put this all together to understand that you were just holding on to an EMA and nothing else. That was the only thing you were holding on to. And then in this situation, I'm going to flip it to the other side to give you an understanding of red, short, right? That means we're looking for shorts. We're certainly interested in things like these resets. When that happens, you see now it's a bear reset that you care about when you're in something like a red. Now, you might say, well, what about red H4 blue? Oh yeah, if you're suspicious on price action, again, you might decide whether you're in a range or if you think there might be a trend change that you can then decide, well, on this bullish reset, I don't like the price action. Maybe I'm going to look for a little bit of a divergence. Maybe I'm going to switch over if that occurs again. If that's the case, by all means, you can short those as well, right? So we're strong to understand that, hey, if we are red, yes, the majority think red, certainly the majority of things we're going to look for are going to be shorts. Blue, green, the majority is going to be longs. But this can help you, right, to understand that, hey, I can try to anticipate some changes if I'm in blue on that daily, right? Or vice versa. If I see suddenly that we're in orange on so something like this, let's say I was orange on the daily, well, maybe some of these resets are going to give me a perfect long, which they do, which I might only run into range highs or something like that. But you could see how that can provide a benefit for you in providing you some assistance that makes a lot of sense for you, okay? I'm actually going to cut this one short. It's not, when I say short, it's already super long, but I wanted to rush out and just give you some different tidbits of how to piece all this together. And then it's up to you, basically. You got to piece it together from there. You really have to understand to say, yes, these things are going to provide a significant benefit to me. They're going to provide me with a significant amount of information that's going to provide edge ultimately. You'll see scenarios like this where you're red, and we go, wait a second, we went red before we dumped out. You'll notice that, right? So that's problematic. This green scenario that we had wasn't going anywhere. So that's a tool to help you say, well, wait a second, I'm not able to gain anything. I'm green, now I'm into green-blue. I'm seeing rejection candles, not good, and then eventually goes into red. I mean, this was a sign that, hey, there is some excess supply there. And then you can start to utilize your abilities to help you read the market even better by identifying that, by seeing that for yourself and saying, oh, okay, I can play these particular resets to my benefit. Notice the reset here gives you a little bit of an up leg. The reset here gives you choppy, but a down leg, right? And then it continues that way. Now, again, you're going to do better in scenarios that are green, or red. And this is only one set of time frames. You'll advance beyond this, and you can use it for other things. You can use it a 1 hour to a 4 hour, 15 minute to a 1 hour. You can do whatever you want. You do have to keep an eye on the higher time frame and the market structure, of course, but don't just jump into the lower time frames. Try to really master this and see the benefits of it, and then from there, go more specific into some of those lower time frames when you already know, like, no, I see it, I can do it myself with this, and then go from there. Now, you know what I didn't show you, and I'm going to go ahead and point out, and I'll end the video on this, full vibration, right? On good old full vibration here, which is the thicker line. I do want to go back and show you the same exact thing. I'm going to zoom in now on this ridiculous thing here. In fact, what I'll do, forgive me for that. Let's see. I got my wife calling me. She's going to kill me because we're way late here. I'm going to actually get rid of this guy just for a second. We're going to zoom in just on full vibration because I do want everyone to see the significant edge that I'm talking about. Now, market structure first always, right? So which way the market is going is what matters most, right? So if we're in a downtrend and you have the capability of identifying that, and most of you should, basically that's what's going to make our determination with this. And here's how we would read it. First of all, any action above 50, you know what, I shouldn't have brought that down. I'm going to show you something with FSR too. Any action above 50, right? typically, again, you'd say, oh, it's bullish momentum. But if price action is down and you're in a bear trend, well, then you're in a bad position here. You're actually going to be in a position to where you would say to yourself, oh, okay, this is a trap, right? Or a potential trap, especially if the momentum takes it to the downside, right? So in that situation, meaning FSR bear crosses this full vibration in that situation, watch what happens when you go either turn at 50, just shy of 50, or even above 50. Now, if it gets to 60, it's even worse, right? But in this situation, you see that here, and suddenly we got this bubble turn, and now this gives us a bigger signal to the downside. This now here is the 50 signal right there, cross to the bear side. It's giving you yet another signal. This goes well beyond 50, right, before the cross happens right there, and it gives you a hell of a leg down, right? This is why we call it full vibration, right? This one, same thing, it goes up to the 60 level. In a bull trend, that's a good sign, but it's the opposite in a bear trend, and this is clearly what? Lower lows, lower highs, right? We're seeing that continue on right there. It tried, but this thing needed to accelerate, and the fact that it could not and instead gave you a swing failure was one hell of a signal in here to start shorting. And what happens from there? A massive dump. A massive dump. That's why we love this one. Please go to 60, go above 60. We love you when you do that, right? Above 50 again, cross again, gives you that leg down. Above 50 again, bear cross again, leg down. Above 50 again, bear cross again, leg down. Above 50 again, bear cross again. Look at this. You're getting 5, 6, 7 candles down when these are occurring. This one happened short, so we'll wait. Above 60 again. Now look, I like this one because this is what I want to show you, the pattern that I said I was going to show you. The old head and shoulders. Everyone knows the head and shoulders. Please show me a head and shoulders on full vibration, because it's literally, it's not free money. Nothing's free money. But when it pays off, they pay well, right? What is that going to mean? It means you go a left shoulder, a head, a right shoulder. And I need that right shoulder, right, to not make a higher high on close. That's all. Write that down. The right shoulder does not make a higher high on close. It means it gives me a swing failure or something along those lines. This gives me a rejection candle with it. Lower shoulder, its trying is actually is higher momentum, see, on close. So the price on close is higher, the momentum is lower. That's a bad sign, right? So technically this is actually a hidden bear divergence right there, right? This is a bear divergence there, mixed with a rejection candle, mixed with a head and shoulders pattern on our tool that we love, which is full vibration, with the cross right there. And you end up in a situation where you get a mega trend down. Following that, it gives you another 50 level flirt cross right there, just for added benefit, to add some more because they love us. Come back again, look at this, going back to the 60 level. We'll take some more free money, thank you. Back above the 50, cross again, another downtrend. Really enjoy all this you're giving us. And then if you really want to give us one of these low ones, this is a little bit more difficult because this could jump around a little bit. But the fact that it gave you this mega candle right there at this level, you can, when you're more advanced, determine the fact that, yeah, this is an ugly move down, which it did, but let's not count that one. Back above 50 again, those are the ones we're counting. But then look, it does go down, but then it kind of just flirts and hangs around. But you notice no loss for you. You're just dancing around and your entry was right there. So that works out well. And then ultimately you're in a situation to where you get a few of those as it chops around. It tries to push higher. We're in green though, so it's doing well. Usually this should accelerate. So as long as it's accelerating, we're fine. But the moment it does this, here's the signal again, guys, right? The moment it does this, which is you do not make a higher high on close above the wick, right? You need it to take a higher high on close. Instead, we got another head and shoulders like pattern where FSR loses that level right there, right here on this one, and we're going down again. If that wasn't good enough, it comes back to give you another 60 rejection here, right there, a mega leg down again. I think I've proven my point. This has significant edge. Learn how to use it. We'll do more videos like this. I want to try to really go down this road, start painting pictures of edge for people that want to utilize this thing effectively. I'm out for now. Thanks for listening.